Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's up, everybody? Springs Trades coming to you live with another week of breakdowns. Hope everybody is doing well. Shout out to Muhammad. Hey, what's up? Shout out to everybody that's on. So, where's everybody calling in from? Love to see everybody, around the world calling in. So, love to kind of do like a roll call when I first start, just to see, where everybody's at and where everybody's living at. So Hugo, what's going on, Hugo? Happy Saturday to you as well. New Jersey in the house. Okay, cool. Yeah, calling in from, and then also, how does everybody's trading week going? How did everybody's week go? So while we're waiting for some people to hop on there, if you guys don't know me by now, I'm Brinks Trades. I'm the resident indices analyst for the Trading Nut podcast. I've been doing this for about 10 years. March of 2015 will be 10 years that I've been day trading. So a lot of experience, a lot of stuff that I've seen in the markets over the past few years. Yeah, a lot of crazy stuff. Brexit, elections, right? So like a bunch of crazy noise in the market. Markets crashing in half a second. All that fun stuff. So South Africa's in the house. Shout out South Africa. Okay. Cool. So yeah, so again, like I'm the resident indices analyst for the Trading Nut podcast. So what I will do is break down the indices, the futures versions of the indices, so NQ, ES, and YM, which is the Dow US500, the S&P 500, and then the Dow Jones, respectively. And then also take a look at the Euro futures as well. So Euro futures and GBP futures or pound futures is going to be very similar to the USD, GBP USD, and Euro USD. So I made the transition to trading more of like futures in the last year. There was a lot of noise going on in the Forex industry. So it's been something that I've enjoyed a lot. I think the prices, the fills are a lot better. Trading from a centralized market is the good stuff. So it's not necessarily broker driven, which is a great thing to do. I still have a gripe with some of the prop firms in the future space. I don't think they're as great service wise as some of the ones in the Forex space. I think, or rule wise, I think they're not as good. So, but I think overall, like, efficiency is there. So it's a process. But let me go ahead and get my charts up. And if you guys have any questions, as usual, feel free to drop them in the chat. So if you know me, you know that I start with dollar index. And the reason for that is because if you understand where dollar's going, you could probably get a better sense of, some of the other kind of markets at play, especially if you're trading currencies, if you're trading Forex. Currency futures, Forex, they're all going to be driven off of the relationship with the dollar. So You understand that. You understand kind of where things are going. So, excuse me. Let me go ahead and get this one. Yeah, cool. So last week we came to the market and we said we wanted to see a few things happen, right? So uh, we really traded off of this target here, which was this low at 100.2 through, well, let's call it 100.25, which was kind of our target for the week. So in theory, we're in very much of a downtrending market. We don't really want to trade against that idea until the market really gives us an idea that it's not really looking for any more kind of bearish liquidity or sell side liquidity, right? So with that in mind, what I wanted to see happen here was the price really trade back up into this volume or this old fair value gap and volume imbalance here. And if I zoom in, you can see this a little better. Get rid of some of these daily boxes. So I wanted to see the market trade up into this range here. Let's call it at like 101.4 all the way up to about 101.82 and then kind of drop from there. So that's exactly what we got over the past week. There was a good couple days where I thought this wasn't going to play out. I'm not going to lie to you. I think once we took out this fair value gap, this daily fair value gap here, I got a little nervous because I thought we were going to make that low. Use this as the high and then kind of trade off of that. But we went a little bit higher, which is okay. So we traded back up in this volume imbalance and then really started trading aggressively bearish here. So we ended up gapping down. So there is a daily gap here, a daily volume imbalance at this level. So going into next week, what I want to see happen is I want to continue with this bearish idea, right? And with that in mind, I want to see the market really run up for this level, run into potentially fill this gap or this volume imbalance here, and then continue to run to the downside. So I'll be looking at the midpoint of this gap. Let me see if I can. If I could drag this down like that. I'll be looking at the midpoint of this gap, somewhere between like a 100.9 for us to come up and retest and look for opportunities to continue to run to that target, which are these previous lows here. So this will be our overall target. I'll just move this down and we'll call it the low of 101.51. I also will be looking at consequent encroachment of this gap here, or of this wick here. It's a long wick. So just want to make sure that the market is going to keep respecting these lows. And we know that market here is algorithmic, right? So we know that the market is going to continue to respect these principles. So ideally, I want to see the market take out this consequent encroachment of this wick. And it's going to give us more confirmation that we are going to continue to run lower. So that's what I want to see on dollar, but overall still bearish, right? Nothing really changed. We really kind of had a consolidation here. We also had some good signs going into last week too. So we created a new imbalance there that we disrespected. So that's all leading signs of more bearishness. So again, I want to see the market continue to drop down. We'll be looking at that level. I'm going to switch things up. I'm going to start with the futures today, and then I'll kind of end with the future currencies today, and then I'll end with the traditional indices. So hop into Euro USD. I'll do Euro USD, then I'll also take a look at the Euro futures, which is the same thing basically. But last week I did my markup on the Euro future or the Euro USD, so I just want to go back to that. So last couple of weeks, right, we ran a level, right, of liquidity here. Boom, we took out that high. And I'm going to have this target here. And so over the past couple of weeks, what we did is we traded back down into this old gap here. And we wanted to see this market run up. And that was kind of what if I go back to, oops. Oh, thought I had my arrows. Anyway, so last week, if you guys remember, I wanted to see the market do something like this. And I actually called this out in the chat. I think I made a mistake on the live call and I corrected it like last Monday. That's why you guys, if you guys are not subscribed to the Telegram chat or in the Telegram chat, it's free. Sometimes I make mistakes on air, but I wanted to see the market drop down and really retest on its way to higher highs. In accordance to, a bearish dollar would equal a higher euro. So that's exactly what we got. So if you drop down to the daily time frame, we saw the market really respect a couple levels here. So there was really, this is that weekly fair value gap. And so over the past couple of weeks, we wanted to see this thing play out like this, where it kind of retests this gap and then finds reasons to go higher. Breaking this down a little bit more. So if I just make this a weekly gap, wait a minute. Let me do this. Weekly. Yes, the daily. Okay, cool. If I tighten this up a little bit here, we saw that the market respected, there's two overlapping fair value gaps here, right? So this one from this high to that high, and then the second one right here, which has that order block resting right there. So we respected that second one, which is cool. Sometimes the first one gets traded too, but the one that's going to be the strongest is usually going to be the one with the order block. So that's awesome. We saw a rejection from that. And then if we start to look at internal liquidity, right? So we saw that this gap right here, this SIBI, was disrespected, which is a great sign. We also ended by trading. Draw that right there. We also ended by closing above this daily gap too. So this is strong signs for bullishness. So ideally going into next week, what I want to see happen, if I just kind of make this gap, well, a few things here. There's a few levels that I'll be looking at. It'll be consequent encroachment of this gap at the high end for us to drop back down into next week and really start taking out highs. If I look at the 4-hour time frame, we actually broke structure here. You can see that we actually created a new set of imbalances here that I think the market could run into. So we'll be looking somewhere in this range here for the market to, I'm actually going to make this not visible on the 4-hour. So if we draw into this structure right here, this is what I want to see the market really run to. So I'll be looking for this 107 or 1.107 level all the way down to the 1.1045 level for us to run into. Again, really find some type of structure here that we can reverse out of and then continue to go higher. And really kind of start taking things to target highs. So the first target that I'll be looking at here would be this old high here, and that is at 1.135. Actually, this will be the first target, this old high. At 1.1019. And then the second target here at 1.135. Actually, I'm going to scoot this up to be the top of the bottom of this fair value gap here because we had a hard time breaking through this gap last time. So I want to see what happens once we get here. So this will be the level that I'm looking at. So let me go back to these comment sections. ES closed as first green week template, buy low of the week. Buy low, daily 2, daily cycle, 3 days, bought some long. I'd love to see this trigger and collapse. PI. Okay, Dow closed the D3 template, which I'll take out. So these, okay, I'll take a look at these in a second. Jocko Soldier, that's what's up. Okay, cool. So let me go ahead and go back to GBP. So ideally what I want to see is I'm going to start looking at buy side targets for these. I think there is a really good case to make for this to continue to go higher. And really this whole run was really just to kind of gather up some liquidity in this gap. And so I think we're going to potentially go higher. So I think that's a good call, especially with this weekly wick kind of wicking down into this and us really not tapping any lower. So really respecting all weekly and daily imbalances there. So I think there's a good case to make for us to continue to go higher. With this being said, I do want to note that structure has not fully broken on the daily yet back into an uptrend. So really we'll start to feel safe about a long-term bullish play up to this high once we start to see imbalances. So once we see this high taken out and structure start to break back into an uptrend and us really start going after buy side liquidity again fully. So that's kind of the call out, the caveat. So again, 4-hour structure is broken, which is great, but really would love to see daily structure break by taking out this high at this first target. And I will be very, very convinced of a bullish move. So with that being said, let's hop over to GBP or pound futures, same thing. So pound futures is actually the euro futures has a huge gap. So if you are trading the euro futures, note that it's a little bit different on this one. So I would like to see the market retrace and test this gap that was formed on Friday and really stay above that midpoint of that gap. I think if we stay above this midpoint of this new day opening gap or this volume imbalance here, that's a good sign. So just really want to see the market stay above this gap. Trade to the midpoint is cool, but staying above this high would be great. So let's go to GBP. So GBP is a cleaner chart to me. So if I'm looking to trade, I think it gapped in the futures too. No, I didn't even gap on the futures. That's awesome. So yeah, so I think going into next week, GBP or pound futures will probably be my target, my best case scenario. It's very clear to see what's going on here. Again, it's pretty much the same chart, which is different than pound future or euro futures because we had a huge gap on there. So last week, what we wanted to see was really the market again in accordance to euro and dollar dropping. We wanted to see pound and euro rise, and that's exactly what we got. So we traded down into this range. And this old weekly fair value gap. So if I get rid of some of these things, old chart work, you guys know that I actually do this. I actually really trade. So that's why my charts are messy, right? So if you see change from week to week, it's because I'm actually putting in work on these charts. Had a good $2,000 week this week. So awesome. All that stuff, again, is documented in the chat. So or maybe I think it was slightly less than two. It was like maybe like 1780, 1800, about 18 something. So with like fees and stuff. So anyway, so so you guys can obviously follow that along in the Telegram. But last week, what I wanted to see is the market really dive back into this fair value gap. We tapped consequent encroachment of this huge CIVI or BISI here. And really just wanted to see this potentially go as low as consequent encroachment and then start respecting this level on its way to the high, right? So something like this, right? And that's exactly what we're in the process of getting. Same thing here. We had a very small gap between yesterday and today, which is not as bad. Not as bad as euro. But ideally, what I want to see happen on pound futures, and I'll show you this, the GBP equivalent, because there's a little bit of difference in the gaps, is I want to see the market again retest. Yeah, let me get rid of this. I want to see the market retest this high. If I go down to the 4-hour, I'm going to say as high. Oops. As high as of consequent encroachment of this is the lowest I want to see the market really trade to. Right, this is the lowest I want to see the market really run to. The reason for that is this is the top end of this fair value gap, this daily fair value gap here. So that's already going to be one level of liquidity that we're retesting that on a higher time frame. So the top end of this is already there. This secondary gap right here is also the 4-hour liquidity too. That's going to be the stronger one again on this time frame because of the order block there. So I want to see the market really run for these this low at the worst and then really start to run. If we start disrespecting this gap, then we might trade back down to consequent encroachment, or we might just be in a bearish model there. So ideally, I would like the market to stay above these highs, and so I can execute on that. That's going to be pound futures. If we go to GBP, USD, again, same thing, very similar, just no gap here. There is a very, very small imbalance from this high to this high, or this high to that low. So first level I'll be looking at, oh, and GBP was what I had the projection. I wanted the market to come here and hit that. I was like, where's my arrows at? So yeah, so ideally, same thing for pound futures, but ideally I wanted the market to really trade into this range, potentially as low as consequent encroachment, but really was looking at this fair value gap here. And that's exactly what we did. We respected, just shy of respecting it, but definitely respected consequent encroachment, then turned around, right? So going into next week, what I want to see happen is the market really run for these lows here. This gap at best, this is going to be best case scenario. Depending on how the week goes, there's some news events next week. I think FOMC is next week. So I'll kind of let you know how that goes. But at best case scenario, I would love for the market to kind of stab down here and then start to turn around. But realistically, I'm looking at two levels again. 1.3102 is the top end of this daily fair value gap, or consequent encroachment of this gap. And honestly, if we get down here again, this can get kind of messy. So I would rather it stay at 1.31019 or 1.3080, right at the low end. And this is just because that respects that order block right here. So stuff could wick down here, whatever, but I would love for it to stay above this order block. So yeah, so that's what I would be looking for. There's also some other levels, smaller levels here, like consequent encroachment this wick, but I'm not going to note that. But ideally, this is kind of my fail-safe level, and I'm looking anywhere between the top end of this fair value gap and this order block. So 1.3114 and then 1.30811. And then I would love for this to kind of get taken to the high. So that's what I'll be looking for. Morning, how's it going? So yeah, so that's what I'm seeing on GBP. Again, if you guys trade futures or euro or traditional currencies, again, it's nothing wrong with it. You know, I graduated to more of the NASDAQ and more of these things, but I still for me, it's a setup is a setup, and it's really just about the opportunity to take something clean versus like, you know, being stuck to any particular asset class. Like last month, I pretty much doubled an account or had a 75% return, primarily just trading pound futures and euro. So it's not you guys can trade. And obviously I can't promise that you guys will do that or can't promise that the results are typical on that. But it's whatever you want to trade. I mean, as long as you can consistently see the setups over and over and over again, it really does not matter what you trade. Some people like indices because they move a lot, they're a lot more volatile, but more volatility also means you can lose more money quicker. And it also means that your emotions will be more at play. So, to each his own. Um, I can trade whatever, so it doesn't really matter to me. Um, all right, let's go to the NASDAQ. Let's go to the indices. This is why you guys are here. So let's go to NASDAQ. And I think I called this off in accordance to what I wanted to see. So last week, what I wanted to see was really the market respect, consequent encroachment of this gap. Let me see if I have the exact. Yeah. So this is what I wanted to see last week. In an ideal world, I wanted to see the market really respect consequent encroachment of this gap and then really run for these lows, especially since last week we kind of determined that we came to the terminal and we saw that the market really did not respect this gap. So we wanted to see this used as an inverted fair value gap. It did not, which is okay. That's completely okay. But you have to know when your strategy is going to be wrong or when your call out for the week is going to be potentially wrong. And so for me, once we kind of took out consequent encroachment and we had some daily closes above this level and this gap right here, I kind of figured we weren't coming back down here. That was kind of just me. So was looking for opportunities to potentially buy. So once we started to take out this gap, um, and actually I think the trade that I actually caught in NASDAQ was a short. I'm trying to remember. I think it was a short actually. So even if your strategy, even if your outlook for the week fails, there's still going to be bearish opportunities or bearish setups um, that play out. And I think for me, if I go back to the chat, I just want to see the one that I caught. Yeah, I actually did catch a bearish setup on Tuesday. Yeah, for a 2K day. I started the session off with a $400 loss and then came back with a $2,000 day. Um, So even if your setup is wrong for the week, you still can find opportunities for bearishness. So I think down here, I ended up catching this sell for a couple thousand. So it's not as, if coming to the terminal again, nobody gets these weeks 100% right. And it's okay. Um, as long as you're protecting your trades, right? And you find bearish setups in that. So, but once we took out consequent encroachment, I kind of knew. So by the end of Wednesday, or actually it was this right here that I caught. But by the end of Wednesday, I knew that we were, the bias was probably going to be off for the week. We were going to probably continue to rise. So once that happened, I was like, okay, whatever. And that's one reason why I stress like not trying to trade every setup, but just find one or two good setups a week and then call it a day. Because even though the prediction was wrong, I still walked out positive or in profit for the week. So that's all you can really ask for. So going into next week, again, now that we kind of disrespected this gap and this volume imbalance here, we've traded above it. So ideally, what I would like to see is the market really retest this gap and then continue to run higher. There is these daily levels here at 690. If I go down to the 4-hour, there is very smooth relative equal highs here. If you're not familiar with that concept, become a student. I teach people how to do this stuff. So ideally, this is going to be my target for the week. I think we are going to be running for these highs. They're very obvious. So let me go ahead and get rid of some of this stuff just to not confuse people. So ideally, what I would like to see is the market really potentially trade back down to this range at the 19,382, start the week off, and then really run for these highs here at 19,690. They're just very, very clean, very obvious, and there's probably a lot of liquidity in that level that wants to get hit. So again, this is the part of trading where you just got to be fluid, and again, trade your be fluid in your plan. So again, we go to ES. I think I had the same thing. Whoa, what is that? It's the wrong one. It was US500, yeah. Yeah, I had the same thing for US500. So ideally, I wanted to see the market really continue to respect. This is an all weekly target, So I wanted to see the market really come back down here, and that obviously was not right. So what we're looking forward to again for this week is, again, these same highs here. If you look here, very smooth, 5,665. I would love to see the market trade to that level, especially since we disrespected a lot of the liquidity markers here. So let's clean this chart up, just get all the way. I'd like to see the market do something like this. I'll be looking at one of these two levels to get hit to start the week off. Let's trade into that 5,580 level or 5,390 or 336. So one of these two. I'm just gonna mark the lowest one, but ideally, best case scenario, it taps that first one, and then really run into this high. That'll be the target. If we get a very extended run, FOMC is this week. I'm hearing the Feds are supposed to drop interest rates, so that could really have some volatility in the market. 5,721 will be that all-time high that we could probably run back to. If you go to YM, again, I wanted to see the same thing play out here. I thought we were going to go short with that. We did not. So I'm looking at this all-time high for us to knock that out. This will be the weekly target. And again, trading back into this range here. At 41,690 is the target. So again, we did not get that bearish volume imbalance here. We also did not drop below this weekly target. So I thought we were going to have the potential to do something like that. So again, 41,651 is the target. We're going to be bullish. So I'll be looking for bullish setups on that. Yep, NAS100 will continue the uptrend. I mean, it's what I want to see happen, right? Obviously, we don't know for sure. We never know for sure. NAS100 is NQ. It's the same chart, right? So when I did the NAS or the NQ chart, it's going to be the same thing. So ideally, we could see the market really retest this imbalance here, right? And kind of turn this into an inverted fair value gap. So I'm just going to make this right, and then go higher. So yeah, so that's what I want to see, for it to go higher, and then we'll go from there. Let me see if anybody has any questions. Yeah, I think that's it. So if you guys don't have any other questions, I'll stay on for a couple minutes, but I think that's all I got for you guys. If you have other charts you want me to look at, I can take a look at them too, and we can go from there. Okay. Let me see if there's any other questions. So all right. Well, I will let you guys go. If you guys have any other questions, feel free to hop in the chat. Let me know. I'll drop the link to the chat one time for the one time. If you guys are interested, again, I'm thinking about doing another mentorship this week, or not this week, this before the year is up. So if you guys are interested in that at all, let me know. I'll teach you how to reprice like I do it. So I'll let you guys go. Enjoy this weekend. Get away from the charts. Go do something other than trade. And yeah, have a good week. So peace.